When looking at the crypto fear and greed index, we can see it's currently at 32. It started to bottom out and potentially rebound. We'll have a look at the charts a little bit later on to determine if this is in fact the bottom or there could be more volatility ahead. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. We can see, looking at the liquidation heat map across the past 24 hours, that there's been a lot of long liquidations. They basically outnumber shorts 2 to 1. There have been incredible levels of fear inside the market, and we can see the VIX has been shooting upwards. We're starting to see a rise in net Fed liquidity, and this is often very good because it does support markets. And we've seen as this rose, we had a bit of a bounce in Bitcoin and the S&P 500. And you can note back here at the start of March, we had an increase that took a little bit of time, but it led to a bounce. We'll be keeping a really close eye on this particular measure. So let's look through the main markets and see what they've been doing. Inside the main markets, in the past trading session, all sectors were up 1.81%. The best sectors, materials and information technology, did really well. Communication services and consumer discretionary did the worst, but they were all good. Looking out across the heat map, Apple did really well, over 4% up, Nvidia 3.12%, Microsoft about 1.9%, Amazon up a little over 2%. For the stock market, the fear and greed index is still really low. It's extreme fear at the current time, but it has been worse. It got all the way down to 3. The FOMC will meet on the 7th of May 2025. Currently, there's only a 20% probability of an ease, which means 80% probability of no rate change. The crypto market is currently retracing. Bitcoin is down 2.05% to 83,584. Solana is down a little over 3% and Ethereum is down nearly 3.2%. Tron is shining in the darkness, up 3.28%. Looking at the S&P 500 on a daily basis, we can see that we're still under resistance. And we've bypassed first level resistance, but we're certainly not at second level resistance just yet. We have quite a bit of resistance that's keeping price down. So just bear in mind that we haven't had a trend change yet. There are definitely a couple of key structural levels that you want to keep your eye on when it comes to the S&P 500. And when looking at the past sessions, volatility, we can see that we had a broad-based rally and a retest of the 53.02 level. And we came through that positive CTKS gap and got stopped out at 53.76. Therefore, it's incredibly important that we bypass the 53.76 level and keep going, because we're now in a negative CTKS gap. And if you've been following the channel and following MicroStrategy or Now Strategy, you know exactly what I'm talking about. These CTKS gaps, when they become positive, they can become filled. But if they don't get above overhead structural resistance, they can get filled to the downside as well. So far, looking at the index futures of the S&P 500 and NASDAQ and also the Dow and also the Russell, they're looking fairly good. And Bitcoin is putting in a good performance as at the time of this recording. This is really good because we definitely need to get above that 53.76 to maintain upward price momentum. Always have 3 successive strategies inside the market simultaneously: the up strategy, the flat strategy, and the down strategy. I know that people aren't taught this way, but this is the way you must think inside financial markets. You don't need certainty as to where price is going, you need certainty as to your reactions around structural levels. Also, when we look at Bitcoin at the current stage, we can see that we're just about right to get above the first level of resistance. Now, this particular level of resistance is not that significant. The significant level of resistance is around that 94,000 mark. Markets are likely to continue to be really quite volatile to both the upside and also to the downside. And remember, price is always moving in a wave. You never really miss out, and you never really miss out on the downside either. You can always dollar cost average in and stack, and of course with your trading you can buy and sell with BORSOG, buy on red, sell on green. But always do so with structural knowledge. When people are new to financial markets, they believe price action is completely random. It's just going on a random walk with the efficient market hypothesis that all data is baked into the price. Actually, price is always moving between structural support and structural resistance levels. How do you see that structure? Well, you can mark up your chart with the most statistically significant method of technical analysis, which is called the CTKS method. And what we've seen across the past couple of days, this $2.61 trillion mark on the entirety of the crypto market has actually caught and rebounded the crypto market's price. And of course, this must be substantiated and cross-referenced to Bitcoin. One thing to note, right up here at this particular point of time, you want to keep an eye on that peak, because that's where structural overhead resistance is at the 2.69 trillion. Total crypto market cap and Bitcoin move as one. They cross-reference each other and actually impact each other as well, as you can see from this fingerprint on the chart. Let's have a look at the indicator so we can see what's actually occurring structurally. Remember, total crypto market cap has a structural resistance level right up here. It has structural support right down there. So what we actually saw is Bitcoin coming into total structural support and then bouncing like a Super Bowl. Now, to confirm an uptrend, we need to get above 84,728. When we look at Solana, it has a very similar fingerprint to total crypto market cap and also Bitcoin, but there are some differences. Those differences actually relate to structure. And where is Solana's overhead structural resistance? It's at 132.86 and up a little bit higher at 133.62. Solana is currently 131.12. We have lower structural support at 128.36 and 125.54 and 126.65. Every chart that you look at will have different structure, but one thing is absolutely apparent. When you look at structure, you can interpret it in exactly the same way. Where there is structure inside a price chart, price will have difficulty getting above that structure. If it fails to get above, it's going to the structural level below, and these act as gravitational wells. They're not brick walls. It just doesn't come back and ping up and just precisely ping down. It doesn't work that way. They are gravitational by nature. But if you get a failure, a structural failure here, you're looking at negative structural attraction to the level below at that particular time. So as soon as it structurally fails, just anticipate the level below will in all likelihood be hit. Now, what happens when it's not hit? This is a terrific sign. If it's not hit, it means that the buyers are stepping in to defend these lower structural levels, these support levels, and that is favorable for a turnaround in price. But always remember, keep the overall trend in mind. If you're making a series of lows, higher lows or lower lows, that's something to be aware of. The trend is indeed your friend. Even if it's going against you, at least it gives you the data that you need. The question, therefore, is Bitcoin and the stock market in the process of turning around? It looks fairly constructive, but we're in the middle of what's called an SA or sell arc. If we find that this comes down, to a consolidation level. If it comes down to around this 82 mark, that's very constructive. If it comes there and bounces up, fantastic. We probably have a strong rally on our hands. If it starts to fall below that 82,000, especially around this area, that's your next area of intermediate support. I'll just drill in there with structure on to give you a better indication. So we saw recently that we rejected this upper structural resistance level. This puts in play this lower structural support level if we start to keep on rejecting. If we do so, around that 82 mark is the next area, but we could get a structural overshoot because there's a negative CTKS gap here and here also. Those gaps may mean that the liquidations start to cascade, and when they do, you get structural overshoot. So please keep this in mind. And then when we look at the 79,500 mark and the lower levels around 78,400, that's looking pretty good. So that is the negative case. What about the positive case? What about if we find structure at around that 85 mark and start to keep going? Well, we need to overcome this level of structural resistance. And of course, above around that 89,500, there's a whack of structural overhead resistance. Don't forget, price is always moving in a wave. It's always going up and down, up and down. Inside 24 hours, price can vary wildly. This is precisely why you need to have your three strategies: an up strategy, a neutral strategy, and a down strategy. Always be prepared for all of those eventualities. Why? Because price is literally always moving in a wave. For example, if I change it to the 5-minute mark, you can see price is moving in a wave. It goes up, it comes down, it goes up, it comes down, it goes up and down and all around the place. This is price. It's very important to get used to it. This kind of structural analysis applies across everything. For example, when we look at gold, gold broke out from the 3186 structural support level. That created positive structural attraction up to the 3240 and a potential overshoot to the 3245 level, which was accomplished recently on gold. But remember, price is always moving in a wave. It depends when you look at price as to if price is going down or up. But when you have these CTKS gaps, both positive and also negative, you have to be aware that there's increased likelihood of volatility inside the markets, and you can take advantage of that as well. So we could say cautious optimism is the way at the current time. If the VIX continues to fall, we would expect the major market indices to continue to do really well. Keep your eye on the futures and also keep your eye on Bitcoin and total crypto market cap. They're very important. And also, please keep your eye on the row 1 references, which are the volatility references. If these continue to come down, that's absolutely fantastic. And just to be aware, the VIX blow-off caused unprecedented pain inside all markets. Keep your eyes on the VIX. Your portfolio depends on it. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.